Welcome to our weekly Forex forecast, and this is for trading for the week of June 1st to the 5th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. Especially right now, markets are extremely volatile, so we have to be careful. All right, so we'll start off as usual with our Forex Factory calendar here. So before we do that, just a quick note on Friday. We did see that markets were waiting on President Trump to basically announce what action he was going to take against China, because China basically passed this new security law where they are able to it's a lot more stricter, and basically they're able to take care of protesters and protest and manage all of that. So it basically takes away the rights, a lot of the democratic rights that Hong Kong citizens have enjoyed so far. So this was basically viewed negatively by many different countries around the world. And now, now that we are behind past that, in terms of the conference that President Trump had, there was really nothing new that was said. Basically, U.S. is going to change the status of Hong Kong. They are not going to be viewed in light of a democratic country. Now they're essentially under Chinese rule, and they have the same policies. So U.S. will put them under the same policy. So there will be a little bit more tariffs and more restrictions on Hong Kong companies as opposed to what they have enjoyed previously. They're also likely to or they are going to suspend visas of some Chinese students and Chinese officials that have tie-ins to the military government. And aside from that, there are some additional sanctions and stuff that will get put, or I should say tariffs and stuff that will get put on. But nothing has really changed in terms of the trade deal. This is what the market was concerned about. And no new tariffs have been put into place. They have not tossed out the trade deal. So President Trump actually wants to keep the trade deal because that was part of what his election campaign was previously. And this is likely to play into the election going forward. So all in all, though, he didn't really take much action against China. So overall, there is really nothing for China to fear from the U.S. at this point. China didn't say anything on Thursday night after President Trump announced that there will be a press conference because they were waiting to see what happens in the press conference. And now that the action is really mild, they're not going to say anything. They have repeatedly said that phase one trade deal is still on, and that makes both the countries happy. Now, in terms of the U.S., the latest is we have seen overnight, or over the weekend, I should say, we have seen protests in multiple different countries cities in the U.S. And the reason we're seeing these protests, or what really kind of tilted everything in terms of protest, was because there was a police officer who actually there was an African American man who was basically thought to be writing a bad check, and so police came and arrested him. And during their arrest, he was not. He was okay. His hands were in handcuffs, but one of the police officers knelt on his neck, and for several minutes, and as a result of that, the man died. And this is basically another example of police brutality towards African American men, especially. And this is why there have been a lot of protests in different parts of the city. And prior to that, there were a few more events that led up to this, but now basically there are riots in different cities, and there has been a lot of property damage. The things have been set on fire, that type of stuff. So police were called in, of course, and there was a National Guard called in as well, and there was curfews in different cities in the U.S. So all in all, the the issue is a little volatile. The situation is a little volatile at the moment. So this may come into play in terms of the market. So we'll have to keep an eye on this. Right now, the equities or the stock market is very, very optimistic. It's positive because the economies around the world are opening. US cities are opening as well. New York is going to open this month as well. So we are basically getting back to business, and that's a positive thing. And this is why we have seen the stock market go up quite a bit. And going into the month end, we did have a very much optimism in the market. Now, with this going on, we have to see if that will have an impact on the US markets. The protest in Hong Kong didn't really play that big a part. So we do have to keep that in mind. So, now we'll see how this plays out. So basically, from our perspective, we just have to worry about the negative impact on the market, because anytime there is unrest, there are political issues or civil issues, they have an impact on the market. So we'll have an interesting, basically two sides pushing here. One, there's all this positive news and the economy is opening up. Now we may have some of this negativity as well. Like I said, the Hong Kong riots and everything like that, or protests, I should say, did not really make much of a difference. But these protests in the US, because there were riots and damage over the weekend, that may make an impact. So just keep that in mind. All right, so in terms of the news coming up this week, we do have PMI numbers here from Japan. So Bank of Japan has been very, very negative in terms of the economy and the growth prospects this year. And this is why we have seen Japanese yen to be a little bit weaker. That's part of the reason. And of course, with all the optimism in the equities market, Japanese yen, which is a safe haven currency, tends to decline anyway. But if the PMI numbers are below expected, we are likely to see a negative impact on Japanese yen. Now, keep in mind, we do have holiday in Europe, so the liquidity may be low in the European session, so be mindful of that. But we do have PMI numbers here from Eurozone here. So when, if these numbers, again, right now they're expected to be better than the previous numbers because the economies are opening up, and hence there will be an increased demand from the consumers. And because of that, the purchasing managers are more optimistic. So if these numbers are better, that will be positive for the stock markets. It will be positive for Euro as well. We also have PMI numbers from Canada. Same thing, if the PMI numbers are better than the previous ones here, which they're likely to be, that would be good for Canadian dollar. Now, US dollar has taken a hit, as we have seen over the last week or so here. And part of that reason is mainly because the US dollar is, of course, connected to the stock market here. As the stock market does well, the safe haven appeal of the US dollar is not quite there. So we have seen money go into the stock market has been going up. And as a result of that, we have seen a move away from the US dollar, and US dollar has weakened. So if the PMI numbers here are better than expected, that will actually be better for the stock market, and we're likely to see the stock market go up, which means even though the numbers will be coming better for the US, the US dollar may actually drop. So keep that in mind. And then we have coming up this week, or Monday as well, we have Reserve Bank of Australia. Reserve Bank of Australia not likely to make any changes at this point. They're not looking at negative interest rates. So I think they're just going to keep things steady as they are. If they have any kind of negative comments in regards to the growth in the economy, so if they talk about negative growth or decline in GDP numbers, that may be considered negative. But right now there's a lot of optimism, like I said, in the market, with everybody opening up their economies, and that's a solid sign. So Reserve Bank of Australia is not likely to change anything in that respect. So I would not expect too much of a difference. So the only thing will be just the commentary, essentially, that we'll have to pay attention to here. And then on Tuesday here, we do have GDP numbers quarterly. for Australia. Now they are, of course, they will be down because the economy was closed. So the negative numbers are not likely to have any negative impact on Australian dollar unless they're too off. But if they're positive, that will have a positive impact on Australian dollar. Right now, we are seeing the positive numbers are being taken into they're more effective right now, and we are seeing an improvement in the currency because of that, but negative numbers are not having as much of an impact. We do have Bank of Canada here as well coming up on Wednesday here. Again, not expecting much of a change here. Bank of Canada has been, pretty much all banks have been out there and speaking their piece. I don't expect much to change. Now, again, if there's even something that is more negative, I'm not looking them to cut rate, I'm not looking them to change rates. They have come out and said basically till 2021, the rates are going to stay at the low levels they are at. So we may not see much of an impact from this. The only thing will be if by any chance they say something negative, which I'm not expecting them to, so we'll be okay here. Non-manufacturing PMI numbers here, again, they're expected to be better than the last time, which makes sense. If they come in higher than this number, again, it will be positive for Wall Street. So negative for US dollar in that case. Thursday here, we have Eurozone PMI numbers. Now, Euro has been interesting. Overall, there are concerns in regards to Eurozone growth. However, with ECB coming up with a bigger than expected package of 750 billion, that was positive, which means that we're likely to see a better growth in the Eurozone. So that's why market was positive about that, and we did see Euro go up as a result. Now, if ECB says anything that is contrary to that, we could see a negative impact. But right now, things are looking positive. So if they stick to what they said last time, nothing should really change in regards to Euro here. Canadian dollar, we have trade balance numbers here, and trade balance numbers are likely to be lower than expected. So a bit of a low number here will not make much of a difference. If they're positive though, again, that will be good for Canadian dollar, but I'm not expecting small bit of a miss here to really make much of a difference. Market is basically ignoring all the numbers that are coming out that are below expectation, and they're just saying, well, it was COVID-19, and that's where we are. ECB press conference, like I said, this is where we are going to hear the commentary in regards to their thoughts with what's coming up. And this is where we may see a bit of a difference, because as the journalists ask questions, that can make a difference. So just be careful when you are, if you're trading during this ECB press conference, because price tends to be volatile during that time. And then of course on Friday, this being the very first Friday here of the month, we have non-farm payroll numbers. At this point, looking for more layoffs. And like I said, the market is just ignoring negative numbers. So if the employment numbers are a little bit bigger than this, no big deal. Market is likely to disregard that. But if they are substantially higher, that can have a negative impact on the market, especially because market has been so optimistic. A big miss will be negative for the market. So right now, overall, stock markets are very optimistic because of the opening up of the economy. So only thing I would say in regards to that, the downside, the potential downside, before we were looking at China, now that everything's been said and done, and really not much has been done that would be negative for China, that's not as big a concern anymore. So just the riots over the weekend here, those can have a negative impact on the market. So we may get a bit of a pullback in that respect. So let's go on to the charts here. As usual, we'll start off with euro dollar. Like I said, euro was very, very bullish, and part of the reason was because the US dollar was weaker, and another part of the reason was because ECB came up with a bigger stimulus package than what the market was expecting, which was 500 billion is what they were expecting, but they came up with 750 billion, which was considerably larger. So in this case here, now we are at the top of the range here. So if you take a look, market has been trading in this range for a bit now, since the beginning of this year actually. So we did see price drop. It tried to go up, but we are back into this resistance level here. And in this case, this is a strong support resistance level. So we have to be careful here. As we can see, this is where it came from all the way. We are back into that level once again, and this is where price has struggled over and over again. So watch out for that. Bias is bullish. The only thing would be if a market for some reason turns into a risk-off mode, then we are likely to see this one drop, because risk-off mode means there will be more safe haven flows into the US dollar. But aside from that, should that not happen with the way things are right now, this is looking bullish. Next target is 1.1230. But just to keep in mind here, into the month end, we have seen stock markets have done well into the month end over the last several months here. Now, now that the month end is done, we may see those pullbacks. So just keep an eye out for pullbacks. But in terms of euro here, we could get a pullback into 1.1020. So that's something I would keep in mind here. Next target, 1.1250, which is the top. So this will be after the pullback. But should there be no pullback, we're just looking at 1.1230 and then 1335. So bullish bias here for euro dollar. So I will look for something like this. All right, pound dollar here. Pound is interesting in the sense that with the Bank of England here, they have been talking about negative interest rates. And when central banks talk about negative interest rates, that is not good for the currency. It's good for the stock market, but not that great for the currency. So we may see British pound come back into a resistance because of that. So we may see a decline, and there were two members who actually voted for negative interest rate in the last minutes that we saw from Bank of England, and they have constantly been talking about negative interest rates, and they have been trying to normalize negative interest rates. So at this point, that is expected, and if that happens, and as we get into June, because we are going to hear from Bank of England in June, we're likely to see pound drop. So watch out for that. This week, though, that may not happen. It will happen leading up to the Bank of England announcement, which is later, I believe, in the second week or third week of the month. So for now, bias is bullish just based on technicals. But like I said, if that sentiment starts coming into the market, look out for a reversal for British pound here. So for now, technicals wise here, I will look for a pullback potentially into 1.2300, then a further move to the upside. So target here is 1.2630, which is essentially the top of this range here. As we can see, price has been trading in this range between 1.2630 and 1.2080. So right now, the candle is quite bullish. I would look out for pullback and then a further move. First target would be 1.25. So bullish bias here for pound dollar as well. Aussie dollar, this has been very strong. When the stock markets are doing well, Australian dollar, New Zealand dollar, all these commodity currencies, they tend to do well. With this one here, we are seeing that price is into resistance. So we'll have to watch out for that. As we can see, this is a strong support resistance level, and this is where essentially price fell off of, and now it's back to that place once again. So it is looking bullish at this moment, but I would be careful. So this is bullish, but with cautious attitude here, because if it doesn't go through the resistance here, we are likely to see price drop, just like it did here. We did see a pullback into this area, and then it dropped from here. So even though the candle close is very, very solid, watch out at the resistance level. So once it gets over to the other side, then we have more room on the top here. And next target would be 0.6765, and then above that we're looking at 0.6860 back into that support resistance level. But the first test would be, can it get through 0.6680? If it doesn't, we are looking for price to drop. So bias is bullish for now. However, I would really watch out this resistance level, because if it doesn't go through, we can see price come back into the range. But for now, bullish bias for Aussie dollar. New Zealand dollar here, this one's looking quite bullish as well. And again, we are into resistance here. So both Australian dollar and New Zealand dollar are driven by the stock market at this point. And when the stock market has gone up, these have done well as well. And if the stock market pulls back this week, we are likely to see this drop. But from technical perspective here, this looks bullish at the moment. And our targets here, so I'm looking for a bit of a pullback and then a further move should it go through this 0.6230 level. If it doesn't, we're back into the range again. So right now it's trying to break out of this range, that this is the range that price has been trading in for several months here, and now it's trying to break out of the range and basically go back to where it first dropped from. So right now, first target would be 0.6330, and then 0.6400, or even 0.6450. So bullish bias here for New Zealand dollar. Dollar CAD here, this one has dropped in keeping with its other New Zealand dollar and Australian dollar here. So this one's breaking out to the downside here. This one had also been trading in a range, and now we're seeing all those ranges. Now we're seeing breakouts out of those ranges. And this is looking bearish here. In terms of the targets, we are, so prices into this support. So be careful with this one as well. As these prices are breaking out, they are into the next level resistance. So we have to keep an eye on that. So here, bias is bearish. And in terms of the move here, we may see a pullback into 1.3850, and then looking for a further drop here. First target is 1.3650, and then below that we are looking at 1.3520, so bias is bearish. So the question here is, do I take into account the ATR, average true range? I look at ATR more in regards to the daily move. So this here, I am just making projections based on what the technicals look like, what kind of support resistance level there is. So when I do the weekly overview, I don't take the ATR into consideration as much, because this is just a simple plan that we're putting together, just so we have an idea of what's going on in the market at the moment, going into the next week. But as I do the daily, I do take ATRs into consideration. And yes, it will be uploaded into YouTube, so don't worry. Okay, and then we have Euro Pound here. Euro Pound has done well because overall, Euro has been strong, and not just that, British Pound has been weaker because they have been talking about negative interest rates. Anytime there is a talk of interest rate dropping, that is negative for the currency. So in this case here, this one is looking neutral at the moment. if the negative sentiment comes in for Bank of Japan, as we hear more from Bank of England, or if somebody speaks or makes comments in regards to negative interest rates, we are likely to see British pound drop. And in that case, the euro pound is likely to go up. For now, though, just based on the technicals alone, this is neutral. This one could go in either direction. And at this point, I'm just going to mark the range here that it's traded in last week. And I'm going to just keep that in mind. If the if the pound sentiment changes, then we're likely to see this one go up and test the high. So this can stay sideways though. So that's what I'm looking for this week. Once pound starts to drop, then I'm going to start looking for euro pound to go up. Euro Swiss franc here, this one has been quite strong. And in regards to the Swiss franc, just a quick comment here. Our Swiss National Bank is notorious for intervening in the market. They keep selling Swiss franc because they don't want their currency to be very expensive because it's negative for the exports. That's why they're quite bad at selling. They will go and sell Swiss franc, which will make Swiss crosses go up. So just be mindful of that. Right now, the central bank is viewing their currency as very strong, and they don't want a very strong currency because of the challenges that it will pose in regards to the trade here. So in this case, we do see prices into resistance. So a lot of these prices are kind of extended here. Actually, let me just redraw that. Prices into resistance right here, and it can turn. So we have not seen price break out of this this level here prior to this so far. Now, with the optimism in the market, we can see prices go higher. Just watch out for the support resistance levels that we are seeing price into at the moment. So bias here is bullish. However, I would be careful of this resistance. If it doesn't go through, we could see price come back down. So watch out for that. That's the caution. But in regards to the target, once we see a breakout, next target here is 1.0820 back into the next support resistance level. Prior to that though, so I should say first target would be 1.0780, then 1.0820. So bullish bias here for Euro Swiss franc. Pound Swiss franc, this one has not done as well because of the challenges with the British pound. So the candle close for this week is not that strong. We do see a large pin at the top, which means we are likely to see price drop again. So bias here is neutral to bearish for pound Swiss franc. We are likely to see a pullback here, retest, and then a drop. First target would be 1.1720, and only if it breaks that level will they look for next one, which is 1.1650. So for now, bearish to neutral to bearish for pound Swiss franc. Dollar Swiss franc, US dollar has not done that well, and as a result, we have seen price drop, which makes sense. And in this case as well, we do see that price is into support here, which is a problem. So we have to pay attention to that. As we can see here, this candle close was super strong in terms of the bearish sentiment here. However, price turned and went back up. So we could see that turn around and watch out for that. For now though, just based on technicals alone, bias is bearish, and I will look for a pullback potentially into 0.9640 and then a drop here. And in terms of the targets, we are looking at 0.9550, then 0.9500. So bias here is bearish for dollar Swiss franc. Pound yen here, this one has gone up with US dollar going, with the British pound going up. At this point, looking bullish, prices into resistance. So something to keep in mind there. but it is looking bullish. So if pound dollar takes off, this is likely to go higher as well. In terms of our targets here, next target is 135.70. So bias is bullish for pound yen. Euro yen here, very, very strong move. Of course, with euro being so strong last week, we have seen a sizable move here as well. So in this case, bias is bullish again. Keep in mind, prices into resistance here. This is where it has struggled previously as well. So we could see a turnaround, but otherwise, looking bullish. Next target is 121.20. So bullish bias for pound yen as well. Dollar yen here, this one's not looking that strong. Prices trading in a range, and it is still sitting in that range. So here we are, I'm neutral on this one because we are into resistance. Price has not been able to break this resistance. So we could see price turn around. Something like that. So I'm neutral here, but we do have a bullish candle close. So especially if the stock market continues higher, we're likely to see this one go up as well. And next target is 108.50. So bias is neutral, but once it crosses that resistance, the only way is up then. Aussie yen here, this one's done extremely well with the stock market. Actually, Nasdaq is in the positive territory. So stock market is enjoying all this free money that is being put into the market by all the central banks. So it's been going up, and some of the, especially the technology companies, have done quite well because pretty much everybody else was closed, and we were using a lot of technology. People were so Zoom, Microsoft, Amazon, Google, all of these companies have done really well in terms of their earnings, and that's why the stock market is enjoying that move up. That's one reason. Another one is because there's all this money being put into the market by central banks, and third, because of the economies opening up, it's been very strong. So if that sentiment continues, this is going to go up as well, and this is what I would look for at this point. So bias here is bullish for Aussie yen. So movement out of Chinese equities will have an impact on the market, but not so much in terms of, but it's not for all of them, right? But right now we're seeing like all equity markets are going higher. So China, what will happen is money will flow out of Hong Kong, actually. More so, Chinese markets did turn down because of the protests and stuff like that. But there will be a flight of capital out of Hong Kong as China takes over Hong Kong because the freedom will not be there with Chinese Chinese authorities going in. So but that's going to happen over a period of time. So we'll keep an eye on it. Hong Kong is likely not going to remain a financial hub. We'll see how much the Chinese authorities, how much control they put on the market, because it will create risk and it will move into other stock markets. But all in all, it will not have a negative impact on other stock markets. So this is what we are looking for here for New Zealand yen. Bias is bullish. Price has broken out of this range. This is where it had been trading for a long time, and this is the first time we're seeing a break. And now there's plenty of room to the upside here where price could start going. So at this point, looking bullish. First target is 68, and then above that we're looking at 69. So bullish bias here as well. CAD yen, Canadian dollar has done well as well. Not just the Canadian dollar, actually, just overall, with all the yen crosses going up, we have seen this one go up as well. In this case, again, prices into resistance. So we have to watch out for that. When prices into such strong resistance, things can turn around, and especially because we are done with the month end now. We are likely to see some selling pressure come into the market. So we'll just have to keep an eye on it to see which wins. Does the optimism win over the concerns that people may have? So far, that's been the case. So here, this is what I would look out for Canadian yen here, CAD yen. And in terms of the targets, first target is 79, second target is 79.80. So bullish bias for CAD yen as well. All right, so let's move on to our commodities here. Starting off with silver is almost back where it was before. Last week we had a strong bullish move. It's gone through this resistance and now it has made another leg higher. So this is moving in lockstep with our stock market. As the stock markets have gone up, we have seen a move back into silver as well. So there is this this thought or some people with a view that stock market is likely to drop again as the reality of the economies, different economies, once they're opened, hits the markets. Right now, because we're still in that stage where markets are still opening up, there is a lot of optimism, and we may see that continue for a period of time. But there will be a day of reckoning where we'll see that disparity between what the economies look like, because so many people are unemployed. A lot of businesses may go under here, and with a lot of businesses going under, that means there will be problems in regards to employment situation. So that's when the market is likely to turn. So for now, though, if the stock market goes up, this is likely to go up. From a technical standpoint, this is looking quite bullish as well. Again, we are into resistance, but this is not a major resistance like this one was here. So now we are past that. Bias is bullish. Now we may get a pullback into that before we continue higher here. So bias is bullish for silver at the moment. And in terms of targets, we're looking at 18.20 and then 18.50 as the second target. So bullish bias here for silver as well. And our gold here, gold has been holding above this previous support resistance level. We did see that gold dropped, but it has held higher, or it held above this previous support resistance level, which makes it bullish here. So next target is 1750 and then 1765. So bias is bullish for gold as well. But just keep in mind the equities markets, because if that turns, everything is going to turn with that. So right now, keeping an eye on stock market becomes very, very important for us. All right, so oil here. Oil has had a good week here, and now we may see a further move to the upside. So keep that in mind in terms of our targets here. And the reason oil is doing well, a couple of reasons here. One, with the economies opening up, the thought process is that we are likely to get the oil demand back. And they were saying the demand out of China is almost to the levels it was prior to the pandemic. So that's what's driving the oil prices here. So bias is bullish. It is into resistance, so watch out for that. But next target here is 39.50 and then 42.20. So bullish bias here for oil as well. Copper here, copper also looking bullish as the economies open up. The demand for copper will increase with that. So in this case, bias is bullish. Next target is 2.45. And then beyond that, we are looking at 2.49. So bullish bias here for copper as well. Bitcoin, I don't have the weekend numbers here. Over here, though, it's still trading in this range. As we can see, we are not quite into the high of the range, so price could go there. 10,100. But watch out for today's, weekend price action, because Bitcoin does trade on the weekend, and it may just have, it could have gone in either direction there. But right now, just based on the numbers from with the Friday close, this one does look bullish, but towards the high of the range. It is still range bound though. S&P 500 stock markets here extremely bullish right now. We have, like I said, just gone through the month end, so watch for pullbacks. In terms of pullbacks here, we may see a move back towards 30.20, and if the price holds above that, then I am looking for price to go higher here. So right now, from technical perspective, this is looking quite bullish. The only thing I would keep in mind here would be the impact of the unrest in the US. So markets don't like unrest, like I said, and especially if there's property damage. Protests are one thing, but if there's property damage, that essentially puts the economy at risk, and markets don't like that. So we may see a drop on the open. Keep in mind though, optimism is quite high, so it may only come into 3020, and if it holds above, I'm looking for a move back towards 3120. So bias here is bullish for Nasdaq. Sorry, S&P 500. Nasdaq here, this is almost into the highs again for the year. As we saw, stock market has been very bullish even prior to the pandemic, and then this was our drop in the pandemic. Now it's back where it was. So this Nasdaq is actually one of the indices that is in positive at this moment. I think it's up 5 or 6% for the year right now. So there's a bit of a disconnect between what the economy is doing and what the stock market thinks the economy is doing. So as we can see, stock market is not always driven by the economy. Other factors come into play that drive the stock markets up. So in this case, looking bullish, first target is 96.35 and then 97.45 or 97.50 here, basically looking for price to go back into the top here. And now once it gets there though, we'll see what happens because that's when we may see a turn of sentiment, but looking bullish for now. And then Dow Jones, again, this one's not at the highs, just like we saw with S&P 500. Only Nasdaq is at the highs because the technology companies have done quite well during the pandemic. So that's pushing everything higher. Now with this one here, prices into resistance, as we can see. This is a strong support resistance area. So we do have to watch out for this. If price is not able to break through, then we're likely to see a turn in this case. So keep that in mind. With that caution, bias is bullish. And in terms of our targets here, first target is 26,720 and then 27,000. So bullish bias here for Dow Jones as well. DAX here did extremely well. Again, a lot of this has to do with Europe opening up, and that's good for the stock market. Stock market wants businesses to be open and people to be doing well. So looking quite bullish. Again, keep in mind, we are into resistance here, and if it doesn't break through it, this is a strong support resistance level, as we can see coming from all the way over here. Price has reacted at this level several times. So in this case, we could see something like this. So this is the caution. We have to keep that in mind because sentiment can change for no reason, or it can change very quickly. But other than that though, overall, just from technical perspective and overall, this is looking bullish. And in terms of the targets here, I would look for a retest of 11,800, which is the high. And then next target beyond that is 12,000 essentially, and then 12,250. So bullish bias for DAX as well. FTSE here has not done that well. Price is into resistance. We are seeing price move away from that. So in this case, we'll have to wait. Bias is neutral though. So we just have to be careful. And then we have Nikkei here. As we can see, very bullish move in the last few days here. It's just been one-way traffic. So we've had a huge huge bullish move here. It's gone past this point. Now it's going back towards where the drop-off point was. Now, Bank of Japan has been negative about the economy there. But again, like I said, stock market is being driven by all this money being pumped into it at this point, and economy is opening up. So based on that, technicals here, bias is bullish. And next target here will be, so the next target is 22,390 and then 22,735. So bias here is bullish as well. The only caution would be, so just keep an eye on the market sentiment. Just because we've gone into the month end, we could see a shift here and a drop. There was a question in regards to gold. Let's take a look at gold once again. Oops. Okay, so let's take a look at the question. The question is it possible for gold to go bullish if the price breaks 1734? Yes. So right now we do have a bit of a resistance right here, as we can see. Once it breaks through this resistance, yes, it is likely to go bullish. So especially if the stock markets remain bullish, I will look for the gold to go up as well. Is it holiday for DAX? And I'm not sure. There are numbers coming out. I haven't actually checked because I don't actually trade the indices. I just look at them. So I have not checked what my broker is saying about that. I think there was an email, something about holiday trading hours, but I would suggest checking with the broker. Sorry, I did not do that. Okay, so we will wrap it up here. Just a quick reminder here, this is the last day here to buy the course. If you're interested in learning to trade, you can check out my course here. Normal price is $497. I was giving a discount to everybody because of the pandemic and the crisis that we were going through. But as things open up and everybody goes back to work, we are back to normal prices as well. If you do want to take advantage of this, you can go to my website, tradingwithvenus.com, and then coupon code is We Got This, and you'll get a discount of $300. So essentially, you're only paying $197. So if you are interested in joining the Turning Pro Challenge, we're making some doing some great things with that as well, actually. And that one is discounted at 30%. Again, that discount will go away as of June. And the price on that will normally is $997. And that includes 1 full year of the daily analysis and my updates as well, and all the stuff, coaching and all that we do in the group as well. So that one, you can get it for $650. So this is really good. If you're interested in trading, this is a good way to learn, good time to learn. So that's it. Have a wonderful trading week, and I'll be back with daily analysis on Monday. Bye for now.